Sven, I think we do have you now, right?
I hope so.
So you've been paying attention to the Nasdaq 100?
Absolutely. It's one of the key indexes to watch. It's also the most sensitive to rising yields. And what's happening on the yield front is absolutely critical here, as we're seeing the 2-year going to the levels that are not seen since 2007. And the 10-year, of course, massively extended as well. That was the setup we had in June, right? We had the 10-year at 3.5% and markets carpet bombing, basically. And that's what we're seeing now. In terms of components above the 50 MA, it's actually sunk to 7 today, which was the same read we had in June as well. So the Nasdaq is indeed at a critical spot. Like in June, when I talked about the weekly 200 MAs being a risk factor, that's a risk factor now too. That's another, 3-5% lower. But at the same time, the entire market is now pivoting off yields and the dollar, and you saw the BOJ intervention overnight. So there is a critical point approaching. If you see any of these charts reverse on the yields and the dollar front, the market paradigm could shift dramatically. But as long as they don't, you have risk lower. That's the challenge for everyone right now.
Yeah. So you're focusing on the Nasdaq in particular, but even within there, software too, right?
Oh, absolutely. And if you look at software, it's actually close to the June low. So again, they also have to hold support. I will have a silver lining for everyone, though. Any of these lows, if they come, okay, we can't be sure of this yet, because ironically, markets are still holding above the June lows despite yields and dollars having risen to new 22 highs. If we do get new lows, they set up technically for larger weekly positive divergences. So to me, the overall market is still setting up for a buy, contingent on yields and dollar reversing.
Hey, Sven, it's Deirdre. Good morning. You tweeted this morning, a few hours ago, that the currency wars have began. That was after, of course, Japan intervened in their own currency market. How does that play out back here? How does that change the charts for you?
Perhaps bears on notice. Look, the strong dollars is causing absolute havoc in the G7 economies. They're all struggling. The U.S. pound at 37, the U.K. pound at 37-year lows, the Europe below parity. That's kind of importing inflation for a lot of these economies. So they all have a vested interest for that trend not to continue, as they're all heading into recession. And I think the BOJ kind of put out a line in the sand today, indicating, no more. Whether they're going to be successful or not is unclear at this point. I think what really needs to happen now that the Fed has become so aggressive is that the ECB really step up on their rate hiking game, because it all is a game of relativity as well, right? So if the ECB gets more aggressive and the Fed may be actually slowing down, then that could put pressure on the dollar as well. So absolutely key to watch.
In terms of company earnings, we've certainly seen the effect of the strong dollar on companies like Microsoft and Salesforce. But there's this thinking among the investment community to maybe, that this is only temporary, or look beyond the strong dollar on those earnings. What do you think? Is that properly priced into the markets for some of these large cap companies?
Well, if you look at the economy going into recession, which I think it will if the Fed continues on this extreme tightening path. Remember, they're still completely behind on the growth curve. They've underestimated the slowdown in GDP. And yesterday's rate hike, 75 basis points, is overtly, I think, risking a larger recession, especially if you go to the terminal rate of 4.5% or above. So as long as the Fed remains on that path, I think all these E's are going to be questionable. I will offer a silver lining on this entire Fed move here, with yields rising and dollar rising and the expectations being so tight. And that is, there may be a subtle Fed put placed now under the market, because with expectations this high, if you get any positive news on inflation rolling over, then these expectations are going to come down as well. And before you know it, then this E that maybe everybody's concerned about may have already been priced in. We will only know after the fact, but October is going to be key in terms of data.